Today we're going to study the 1929 Great Depression and today's market, and there are quite a bit of similarity between its technical and fundamental, and this is what we are going to explore today. But before that, do take some time to read into the disclaimer down here. Let's get started with its technical studies, and when we do that, we are studying into the behavioral price movement. And that refers to the fluctuation in the price of a financial assets that are caused by the collective behavior of investors, traders, and events. And they tend to repeat itself over and over again. So where are we today if we were to compare to 1929? And I believe that we're about here. And we may have a little bit of more upside to go because the inflation seems to be taming. But come to a point, I believe that we'll meet with some headwind again, and the whole trend will resume its downtrend because the fundamental issue, the fundamental problem still exists. Let's start with a clean sheet, and what we're looking at here in 1929, the Great Depression, we're looking at Dow Jones Industrial Index, and then it was the industrial age. But what we're looking at here today in millennium is the technology age. We should look at the Nasdaq. And what I'm seeing here at the peak, there was this bearish engulfing body. And so similarly, in today's market, we are seeing a bearish engulfing body as well. Now, in 1929, before the peak, we saw that there was a mad rush. But during this mad rush, there were already underlying problem, which is an expansion of credit. Then the market peaked with a bearish engulfing body. So is today's market as well, with a bearish engulfing body. But before the market peak, we have this mad rush as well. And what was the story behind this mad rush? It is the easy money policy that created a lot of inflation and the market peak. Then we saw that this was the first crack, and in 1929, this down move, it is also the first crack. When I say first crack, I'm referring that the inherent problem has surfaced, and it gives us a hint that was the first crack. And then back then in 1929, the policymaker, the central bank, must have done something, and we saw that there was a retracement. And today it is the same as well. The policymaker, the Fed chairman, the central bank, you can call it, have do a lot of measures, and that's what we're seeing, a lot of this retracement here. And I believe that the inflation problem have not really solved yet. Come to a point, we will face some headwind, and the market may resume its downtrend. And exactly where it's going to hit, I do not know, but this is the direction that I'm seeing as of now. And on this note about retracement, at the beginning of the year, did we manage to spot it based on the technical or the behavioral price movement and the fundamental? And I would say that the answer is yes. And this was what I shared in my YouTube channel in the first week of February in 2023. The title is Short-Term Bull followed by Range, and it's very much technical and fundamental. For technical, we could see that it has broke above this downtrend line, and fundamental, it was that since June 2022, the CPI has peaked at 9%, but as of December last year, 2022, the CPI have kind of eased off to about 6.5. I believe that the stock market is going to have a short-term rebound. And I also stated very clearly that come to a point you have a standstill where people will start to question about, has inflation really tamed off? And the market may enter into a range, but I suspect that this range will ultimately give way and the downtrend may resume. Next, we're going to study into the fundamental reason of what happened to 1929, the Great Depression. And I'm going to read to you the chain of events that's happening from point A to point J. In the same time, I want you to make reference to the recent years, and it seems to me that point A to E has already happened. And it's good to know that could we enter to a possibility that there will be point F to J. Now, let me begin with the story. The Great Depression was a severe worldwide economic depression that lasted from 1929 to the late 1930s. There were several factors that contributed to the trigger of the Great Depression. But the key triggers is often attributed to the stock market crash of 1929. In the 1920s, there were a period of economic growth and prosperities in the United States, also known as the Roaring Twenties. During this time, people invested heavily in the stock market, and the price of stock rose rapidly. However, in September and October of 1929, the stock market began to decline. And on October 24th, 1929, known as Black Thursday, panic selling began, causing the stock market to crash. The stock market crash led to a chain reaction of events that contributed to Great Depression. Banks have invested heavily in the stock markets and also made loans to individuals and businesses that were unable to repay them. As a result, many banks failed, leading to a loss of confidence in the banking system. The collapse of the banking system led to a decrease in the money supply, which caused a decline in the spending and investment. The decline in spending and investment led to a decrease in production and employment, which caused a further decline in spending and investment. And the cycle continued. In summary, the key trigger for Great Depression was the stock market crash of 1929, which led to a chain reaction of events that caused the collapse of the banking system and a severe decrease in spending and investment. I'm not exactly negative about the whole situation, but rather I'm trying to create a lateral thinking skill about how we should invest and trade. As for long-term investing into the US stock market, maybe I'll just put on hold, but rather I'm looking for trading opportunity. I have included some information on the different types of Nasdaq below, and also some of my past tutorial relating to today's discussion and its links below. Keep watching it again and again. You too can get into the market with greater precisions. Always enjoy studying the correlation between the markets, and I hope today's sharing it will be helpful in how we invest and trade. Really happy that you stayed through this video. You have many great trading weeks ahead.